and welcome. You're watching What's Hot on Business Today Television. I'm Sakshi Batra, and what's hot and buzzing on D Street is clearly the new debut stocks. PhysicsWalla has delivered a substantial listing gain in today's trade. 145 rupees per share is what it has listed at against the issue price of 109 per share. Substantial move on the day one, on the minute one that we are seeing for PhysicsWalla IPO. 38% premium listing is what we are given to understand. On the BSE, it settled at 143 rupees per equity share on the BSE stock exchange as well. When we talk about the 33% gains that we are looking at on the BSE, but a substantial move that we've seen right at the opening for PhysicsWalla. This is the edtech platform, and that's delivered strong gains on the minute one. Of course, the grey market was just indicating about 10% kind of a move, but this has beaten that as well, and now the shares have listed at about a 38% premium as far as the NSE is concerned, and further it's moving up in pace. You can see 160 odd levels now on PhysicsWalla being seen at this point in time. It's moved up 45% in just a couple of minutes right after getting listed on the stock exchanges as well. Remember, we had already seen that at the upper end of the price band, the post-issue market cap was estimated at 31,169 odd crore rupees, and with this listing, it has further moved up. This is a 3,480 crore IPO that was subscribed just about 2 times during the November 11 to 13 issue window as well, and it has actually received strong response. The retail investors portion had got fully subscribed, by the non-institutional investors had only subscribed 48% of the portion. The QIB portion had got 2.7 times the allocation as well, and now the company has gotten listed at a 38% premium and further moved up to 45% gains right at the open. Let's actually welcome our guest on board. Mr. Arun Kejriwal joins in, seasoned market expert, to give us a broad understanding of how do you look at these stellar listing gains of certain IPOs, and what should investors be really looking forward to. Warm welcome to you, Arunji. Good to have you with us on the show with us. Just to start off by understanding these new age IPOs, we had seen Grow just a couple of days earlier, and now you have PhysicsWalla, substantial listing gains. Grow yesterday crossed over its market cap by 1 lakh crore rupees as well, with 4 days of substantial moves of almost 70%. Similarly, on day one itself for PhysicsWalla, it's a 45% gain already. How would you look at it, sir?
So, Sakshi, good morning to you and to your viewers. Honestly speaking, if I make an admission to you, some of these new age companies beat me. They defy logic. They don't seem to perform as expected. Let's take the case of today's listing, PhysicsWalla. Nobody wanted to subscribe to the IPO, and it lists at 145, gain of 38%. Goes on to touch 168, and now it seems to be softening comparatively. It's down to 152, 153. Where the share will end will be yet another story at 330. The fact of the matter remains, historically, education companies have not made any serious money for investors, whatever be the name. Educom, for example, we had the quota companies that had come. They have not made money. So I don't know whether PhysicsWalla will be a standout example. So far, it seems to be doing well. Let the day unfold and close. Getting along with the other companies, Grow was an outstanding company as far as its business model is concerned. It is a pure distribution company, and somehow or the other that business model appealed. I had the good fortune of meeting the promoters, and when I asked them whether you have relationship managers for high frequency traders, ultra rich HNIs, they said the concept of relationship manager doesn't exist. We believe on tech, we are tech driven, and that's how we function. We are quite confident of our systems, and we don't have to invest in relationship managers. It's our platform which gets all our attention. And you can see the kind of stellar performance. The share has almost doubled in 5 days' time today at its peak. Where it will continue will be a interesting thing.
Absolutely. Let's also try and understand from you what about these substantial valuation game that we always talk about, that these IPOs are already coming in at steep valuations, and then when they also give such remarkable listing gain as well, thereafter what should be the idea that you should be looking at as far as these companies are concerned in the listed space, for those who did not get the allotment and are looking at the substantial gain and thinking that maybe they should participate on day one? What should they do?
So, Sakshi, there is a very important term that we use in the market: FOMO, fear of missing out. Right. This is something that is a problem with investors in the market, particularly the new age investors, if I could say, people who have come to the market post-COVID 2020. Now, they are not sure of the valuation, they are not sure of the company, and they choose not to apply, or they don't get allotment. Looking at the listing price, they feel they have missed out, they've lost something, yes. They jump in. The price then tends to sort of move here and there and then slips. So they lose money and they feel cheated. I believe jumping into a share which you are not quite comfortable with at issue price just because the price has opened up is a completely wrong way of looking at stock market. We have over 8,000 listed entities. If you don't get one or don't participate in one, it's not the end of the world. Leave it. This share was not meant for you in the first place. I believe this kind of determination needs to be brought in as part of your discipline, because if you start chasing shares on the basis of price, you are going to lose out big time.
Absolutely. Let's also talk about one of the recent listings that we saw, that was Lenskart IPO, sir, that came in as well. And I wanted to bring into focus this stock. 419 is what it is currently trading at. When we look at the move today is down by 2%, but it has actually just about stayed flattish in the last couple of days after getting listed. What's your sense here, sir? We have discussed this when the IPO was about to come and the lofty valuations that were again in question. Post the listing, what's the scenario here that you're explaining to all viewers?
So, Sakshi, it's an interesting business, no doubt about it. It has size, it has scale, and we also need to understand that Lenskart is actually three businesses rolled into one, the way I look at it. The first of those three businesses, it's a extremely sophisticated, tech-driven logistics company, because mind you, all the orders that are received during the course of the day till 9 p.m. and are to be delivered in and around metro cities are delivered within the next 24 hours. So maintaining the logistics for this is a challenge, and you can only do it if you are a sophisticated logistics company. So that is the first part of the business. The second part of the business is it's a high-tech company. You can order a pair of glasses, seeing how they would look on your face, play around with the type of lens you need, get that final feel of how it suits you, also get confirmation of an AI bot which tells you, hey, you're looking good, and they speak to you in multiple languages, and then at the end of it all, it gives you eyewear. So eyewear is the business, but it is driven by these two verticals. So it's a combination of these three activities, because without either of the first two, you can't get the final product in the time that the company assures you. So if I
Okay.
were to look at it from valuation perspective, Sakshi, you have to decide how much you give for each of these activities,
Correct.
because without the other, it is incomplete. So
Absolutely.
prima facie, Sakshi, it looks expensive at 70 odd thousand crores that the company is valued. However, we need to give it that opportunity to declare its results, and post declaration of results, seeing the growth, seeing the profitability that it achieves, we'll be able to sort of take a fair call. If this company has to do well, it's not about 1 quarter or 2 quarters, it's the progress and the growth in sales which is going to drive valuations of this company. So
Okay.
this company is here for a long haul, and I don't think investors will ever feel that they have missed the bus, because things are not going to move very, very dramatically between 1 quarter and the next.
Fair point. Let's also broaden our horizon and try and understand from you, Mr. Kejriwal, when it comes to the earnings that have been posted by the already listed new age companies as well. And where do you see some promise emerging after the end of Q2? This entire universe, of course, like we've just discussed, there has been a lot of debate on the valuations, on the sustainable business model, whether this will translate into EPS and profitability and sustained growth, or will this be continuously marred by a lot of cash burn? Now, some of the companies which had been facing a lot of troubles have also started to display at least some green shoots, if not all, in the Q2 earnings. I'm talking about the likes of Nykaa, for instance, or Honasa Consumer, Delivery, for instance. How are you looking at these new age companies, and where do you think they stand as of now? Paytm, PB Fintech, how are you looking at these companies, and where do you see at the end of Q2 that yes, these companies are coming on track?
So it's an interesting question you've raised, but I would like to put a rider on it.
Sure.
While they are new age companies as far as business is concerned, in the listed space, they have spent a couple of years already.
Yes.
So what has happened is, unfortunately, the early bird investors who got in expecting results, expecting listing pop, got some excitement, got some returns, and then a bigger disappointment. We all have seen how a Honasa or a Nykaa fell from their highs and fell. I'm talking not just of a few percentage points, but the price more than halved in the case of Nykaa, and in Honasa also it was a substantial fall. So there have been deep burn of pockets of most of the investors. Yes, they seem to be now getting their act together. Probably the heady days of after listing and then the feedback from investors, the market performance has made management, owners, promoters a little wiser, and they seem to be now responding to what the market and investors tell them. It's still early days to say that they are now back in the pink of health. We will have to see whether the coming 2 quarters show you that kind of growth that has come in this time. We all need to understand that September was something unique with the GST changes, and most of these products are part of the so-called luxury pricing strategy, where they attract the higher rates of GST, and that is where you have seen the maximum cuts coming in.
Absolutely. Let me also just highlight a few more stocks from this within this new age tech basket. We have some brokerage house updates coming in today on Eternal. Morgan Stanley has come out with an overweight rating here, so with a target price of 427. They believe that Eternal has the best risk reward within this entire new age basket. And therefore, they would be using the current weakness to accumulate the stock. They believe they like Eternal strategy of doubling down on customer market share and wallet share expansion. which can follow later. They also believe they are assuming the stress case of higher aggression could mean push out of profitability, but this is not a game changer. The stock is implying a 2-year forward EV to GOV of 1.1 times for Blinkit, and assuming the stress case scenario, they see the stock bottoming at around 285 odd levels. Let's try and understand this Eternal, Swiggy, food delivery space also a bit with you, sir. Of course, we have been consistently seeing improvement in the contribution of revenue from the quick commerce space for these erstwhile solo focused food delivery companies, and they are expanding their wins now in the quick commerce space. That has really become the focal point. How much more do you think can these companies tap onto as untapped potential, and that can help the companies' stock performances to further from here as well?
So, Sakshi, quick commerce is an area where I have a completely different take. Okay. The importance of quick commerce is assuming that the person who is ordering there is a little careless in planning what he needs. It's not every time that you should have an emergency and you need to order something. It also means you are not a person who takes care of his monthly requirements and orders a grocery product just because he's run out of stock. When you order on a quick commerce platform, irrespective of the name, Swiggy, Blinkit, Eternal, or maybe even a Reliance, JioMart, JioFresh, or whatever, you are paying a bomb for service because you would order 1, 2, or maybe 3 products. So if you add the delivery cost of getting it in 10 minutes, you could be paying 10 to 20% more than the MRP price of that product. I believe even the Gen Z, after doing so for a couple of months, realizes, hey, my expenditure has gone up substantially on these emergency products. Let me plan a little better. I believe over time there would be correction in this kind of ordering, and these guys would have to rechange or reshape their product pricing and not charge a bomb to the customer simply because he wants it in 10 minutes.
Okay, got that. So that's the new age companies for you viewers. Let's also focus on the broad earnings that have wrapped up. We have a lot of brokerage houses that have come out with a report post the Q2 earnings, looking at where the earnings upgrades and downgrade scenario has emerged. So I'm just going to be highlighting the broad aspects that we have culled out from various brokerage houses, and then we'll take an overview from Arunji as well. Now, for the highlights, most of the brokerage houses believe that this time around in Q2, the growth was largely led by the oil marketing companies, telecom space, metal space, as well as tech NBFCs as well. Now, they also believe, however, banks have pulled down the profits of the overall Nifty earnings as well. Nifty, they believe, has delivered 2% year-on-year profit growth, whereas the expectations were somewhere around 5%. Although this is the 6th consecutive quarter of single-digit earnings growth as well. They've also found out that just about 5 companies have actually contributed of 300% of the year-on-year earnings accretion from the large cap Nifty universe. And they have pointed out at 5 companies: Bharti Airtel, Tata Steel, HDFC Bank, Reliance Industries and TCS, that have lifted the overall profits of Nifty as well. But where the drag has actually come in from auto major Tata Motors, from ONGC, from Coal India, from banks like Axis and SBI, from Adani Enterprises, pharma majors like Sun Pharma, even HUL, Kotak Mahindra Bank and Tech Mahindra. These have been largely the earnings drags. Now, we'll try to understand this broad aspect, and then we will go on further into the brokerage houses highlights. According to you, first question to you, Mr. Kejriwal, with respect to earnings is, finally, have you seen the earnings cycle bottoming out with the end of Q2? Are there any broad signs that the earnings downgrades have substantially reduced, and there are cases higher cases for earnings upgrades? And which are the highlights for you that have come in after the earnings season, sir?
So you've surmised the entire report quite well. Let's take your questions one by one. Do I believe that the bottoming of negative is over or is happening? Not yet. Probably we will need confirmation in Q3 whether we can actually, stick our necks out and say that yes, we are now bottoming out, because expectancy over the last 6 to 8 quarters has led us to get disappointed quarter after quarter. Second, are the number of positive versus negative increasing? Not necessarily. It's a mixed bag with more or less equal number of players. Even in the top gainers, if I were to call it in that manner, versus the top losers, the domination of the gainer versus the loser is so stark that the numbers seem to be getting, confusing and creating a lot of jerky movement and giving a different distorted picture than reality. One Tata Motor versus one Tisco, or an ONGC versus a Reliance, that whole thing makes it completely different. And we all know the reasons why some companies have not done well and some have done well, geopolitical being one of the major reasons. The third thing that you asked, which is very, very important, wherever there has been positivity, good impact, there were initial positive moves, but they failed to build and sustain on them. Two examples: Reliance Industries, after a positive set of numbers, positive earnings, while the share did go up for a day or two, it fizzled out. Bharti Airtel, even more stark. It gained in the first hour of trade and then just collapsed simply because there was an OFS on that day. With such earnings being reported, you would have expected momentum to last at least for 3 to 4 days. So that brings you back to the market knows it all. Probably the market was expecting such stellar results, so it didn't turn out to be a surprise. It was on expected lines, is what I would like to sort of end it at.
Okay. Let's also focus a bit on the key sectors that you will focus big on in the second half of the financial year, sir, that have already given us the signs that the earnings pickup is taking place. And for those investors who track earnings very closely, some of the sectors and some of the key stocks should definitely be put on the radar for the second half.
So I believe the biggest uncertainty in the market is global trade.
Yes.
While we are entering into multiple country bilateral trade agreements, the big daddy still seems to be missing, and that's a tough cookie to crack. If you remember, even Switzerland, USA have signed their tariff treaty, and Switzerland had a big tariff imposed on them by Trump. Now, in the case of India, certain food items which are affecting inflation in a big way in America have been relaxed. Duty has been removed, tariff has been removed as of yesterday. But I believe it is being done more because it suits America, and the backlash that is being witnessed with the common American criticizing the high inflation, at least on food items. On trade part, it should happen sooner than later, but until clarity emerges, this is going to keep Q3 earnings a little under pressure. As it is, we have already spent half the quarter with this uncertainty, and just about half a quarter remains. Probably the impact that could have been felt if the tariffs had been normalized, etc., would have reflected. Now, maybe the impact is just minor that would be felt on the positive side. We would have to wait for Q4.
Okay. The other aspect, Arunji, that I wanted to focus on is other assets beyond markets, and that's Bitcoin that I wanted to discuss with you, sir. Bitcoin, especially because this Bitcoin has actually slipped below the $90,000 mark. This is for the first time in the last 7 months. Bitcoin is at a 7-month low right now. It has also erased all of its 2025 gains. And most of the experts have pointed out, who are tracking crypto very closely, that the picture remains fragile, at least for now. Now, why has the sell-off really coming in? Most crypto experts believe there are fading hopes of a Fed rate cut and inflation concerns. There is thin liquidity, institutional and retail that is exiting the market as well. There are global trade tensions, like for the markets also, that Arunji you highlighted, and that's forced liquidations triggered of sell-off as well. And now Bitcoin is behaving like a macro asset, reacting to dollar and policy shifts as well. Those are some of the statements that are coming in from some of the key Bitcoin experts. Now, we do know that in the last couple of years, especially at the beginning of this year, with the Trump government coming in, this asset class had shot up above all other asset classes, giving substantial returns in a very short while of time. There were big expectations. There's a Bitcoin reserve that's getting created. There's going to be a new wave of Bitcoin, and how this could be probably the best asset class that a lot of people were hoping to see on. Again, we are seeing there is a lot of pressure that's building up here. How are you looking at this asset, Bitcoin, if you consider it as an asset class as well, sir?
So, first of all, I do not quite understand the mechanics with which Bitcoin works. It was supposed to be an asset class immune to geopolitical global movements, currency movements, political movements, etc. But as you very nicely put it, that also is behaving in the same manner. So the immunity that a Bitcoin was supposed to bring as an asset class seems to be now changing. It's behaving like one other asset class similar to others. That is the first thing which makes that uniqueness of this instrument lost. Second, the fear of Bitcoin rising because of demand supply is also now getting a little confusing, with the President of the United States being deeply involved in Bitcoin in his personal capacity rather than just as the head of state. This is adding new dimensions to the entire picture globally, some positive, some negative, but confusing. I believe, looking at all this, the safe haven, gold, silver that we are talking of in 25, the kind of run-up that we have seen, geopolitical, with China being one of the biggest buyers of gold non-stop, central currencies around the world, central banks around the world buying gold left, right, and center. And in India, during the Diwali season, we actually saw lines of people in Zaveri Bazaar waiting to enter the shop to make purchase on Dhanteras. All of this seems to be removing the sheen of a Bitcoin, the secrecy element that was associated with it, the dark web that people talk, and makes a non-believer like me in Bitcoin that much more convinced that it has lost its halo.
Okay. All right, on that note, we are out of time right now. Thank you so much for being with us, Arunji, for sharing your insights on a broad range of spectrum of topics that we've discussed today, from IPOs to new age companies to the earnings aspect, as well as a new, of course, we focused on this different asset class, that's Bitcoin as well, and what's going to be seeing going forward from here, why the fall right now, and what should investors be really looking at this point as well. Thank you, Arunji, for your time as always.
Thank you, Sakshi.
We will wrap it up on that note on this edition of What's Hot. Markets coverage continues on the other side, and in case you have questions about the stocks in your portfolio, I'll join you at 12 noon for daily calls.